Yeah.
Um,
I mean, I think so. Last time I spoke about markets was last November,
mm,
and then I think I mentioned in regards to the whole inflation stuff and why I think that inflation would go down, and it had a lot to do with the Ukraine war as well as the supply chain crunch in China, and again with the China's opened up, right?
yeah, yeah.
So you had the reversal, right? But I think the one thing that hasn't been resolved is the Ukraine situation.
Mm, mm.
So I don't think that people should be thinking following the inflation number because I think the inflation number in CPI is manipulated. And I
Hence,
think,
hence some of
and
the
I think,
projects that we were talking about here. And I want to get into that
and I,
after because like I have a thing
yeah.
about thing or two to say about that. But yeah, go ahead.
So I think you have to assume that numbers are being manipulated, the inflation numbers, to um, follow the agenda, right? Which was last year was to basically because of the sanctions against Russia and etc. is to kind of push up inflation to blame Russia
Mm,
on the situation, right? And of course now things have gotten better, but given the fact that Ukraine situation is now escalating, I think again they'll continue to use the dollar as a weapon.
right.
So I prefer to look at more of that context versus kind of just the inflation because I think that story makes a lot more sense. So I think if the Ukraine situation wasn't escalating, I would think that we might have just bottomed. But since that stuff is escalating, I feel like inflation might come back, and the main objective is because of the war situation.
Mm. So,
So
like I do want to go more into this, but before I do, I think we were talking about trueflation and like a lot of these numbers. I do think it's very interesting. However, what I also know from just basically like how the world runs is that yes, like the numbers in I think CPI and core CPI are like pretty off, like especially when you look at like a very popular like everyone knows at this point basically like how they calculate like rental and like housing. I think it's a very backward way of kind of measuring that. Now, having said that, that's the number that everyone follows, right? So it becomes this cycle of like because everyone follows that number, it doesn't really matter that number is true or not. It becomes a de facto kind of anchor, and because of de facto anchor, everyone follows that number, and it just kind of goes into the cycle, right? So even though there are so many different, ways of I guess like measuring, and like everyone knows that, like I think David said it as well, like we all kind of know that these numbers are very much manipulated and kind of like, suit in a way where the Fed wants to, or like the government wants to kind of like, fit the numbers in. Because of that reason, I feel like these, guys like Trueflation, we looked at that. We looked at the project. The one thing that we were very worried about is the adoption side, because especially for products or numbers like this, adoption becomes very, very, very challenging. And it's not like these numbers are, I don't think these numbers are forecasting because like they're basically using a different methodology to calculate them. And you're arriving at this, like it's the same number but calculated differently, right? So I don't know if these numbers become indicators or like, precursor to like upcoming numbers. I don't think that's the case. I think it's more of like because these numbers are calculated differently, unless the CPI or like the, like the what do you call that? Like manipulated numbers. Unless they start putting in some of those calculations, it's I think it's challenging for those numbers to kind of match up. And if what people are going to be valuing or like anchoring themselves is, the popular number or manipulated numbers, then it doesn't really matter what the real number is, does it? So that's what I feel like, a lot of these indexes, a lot of like, RWA, like real world assets, or, some of these, alternative kind of like indicators that are coming up. I personally don't have, I'm not too bullish on them because of that reason. But maybe someone has like a different take on that. I don't know.
I think it just comes down to, again, the yield, right? The risk reward trade off that you're willing to accept. I think right now, part of the reason why, in the first place, all the exchanges were willing to try and deal with these structures, right? And like you see that like BUSD, right, is this Paxos white label, right?
Mm,
Binance had a rev share agreement, right? This is something that allowed them to get some upside in this type of printing token business, right? In a way that they can share some of the treasury yield that's generated with all of these off-chain deposits, right? And so I think in some way, what's the most important thing that we can do as a space is to build velocity for this space, right? And I think that the beauty of stablecoins, whether fiat backed or not, is that they do allow for a higher velocity of value being exchanged between hands. Economies recess when there's not enough velocity.
mm,
And I think right now, I don't think we know enough about all the different things that we're using within each of our ecosystems to get people to do way more than if they were just hodling. I guess maybe the best way to put it is pure hodling isn't actually necessarily something that drives value to an ecosystem. It just doesn't, it preserves value inside an ecosystem because, at least you're not dumping and exiting the world, right, of crypto. But if you're let's say fundamentally providing liquidity, right, the magic that Uni V2 did for the world is it got a lot of regular users, and I would argue even Sushi, to get people to at scale put into deposit liquidity into two-sided pools, right, with
mm,
impermanent loss,
mm,
is that users would have never done this strategy in real
mm,
life.
mm,
They never placed perfectly kind of symmetric bids on both the bid and ask side of any market that they're trading.
right.
They also never really diversify to be like 50-50 exposed to two things that they believe in. And I think that's some of what got a much higher level of velocity during DeFi summer to get people to trade and participate in economies and allow others to participate in the economies, right?
Mm,
When you provide liquidity, your impermanent loss is also someone's entry point into a token that they believe in.
mm, mm,
And right now, if you don't have the incentive to do that, and market makers are scared because they've already lost half their stack in various existential crises and black swans that we've seen over the last few years,
right.
then I think that's what you're seeing is a velocity slowdown. And so to me, I welcome anything that does drive velocity back into the ecosystem, whether that is real world assets or other kind of initiatives.
Right. But do you think that some of these real world asset initiatives will drive velocity back? Because like I have hard time maybe like envisioning that those will actually gain enough traction to drive value, especially like if we're just talking about indicators. I definitely don't think those will, drive more velocity into the ecosystem. What I can envision a little bit more, maybe my imagination is very narrow here, but what I can envision is maybe NFT and some of the NFT fi and NFT perps, and like I know that community hasn't really touched like so and so called DeFi, and like maybe NFT fi is the kind of like entry drug into touching more of the tokens and like getting involved in more of like basically providing liquidity for the token community. So maybe that's one thing that I could think of, but yeah, like I'm just wondering if anyone else has like um, like better thesis in terms of yeah, like what might be the next thing that will drive velocity back to the markets, or you don't have to have one. I guess that was my question.